Hello, hello. Do you guys got me loud and clear? You should hear me pretty good on YouTube, right? All right, I got some echo. Let me cut that out. All right, let me check the audio on Rumble real quick, and we'll begin. Give me 1 sec, guys. Had a little bit of issues connecting to Rumble and YouTube at the same time. But I'm see, we're a little delayed on YouTube, on Rumble. Alright. Alright, let's see how we are. Hello. Do you guys got me loud and clear? Alright, cool. Rumble is live. I got the audio on Rumble. Alright, guys, let's dive right in. Now, if you guys saw the thumbnail, this video is going to be about currency pairs and investing. Okay. Let me get the video up on here. So if you, any questions, comments, guys, as I go, just drop them in the comment box. And we can have that conversation. If you have any questions, please feel free to drop a comment. For people who watch on YouTube, hey. Cool. Let me see. I got the mouses running. Turn this off. Give me a bit, guys, and we'll begin. All right, give me a second, guys. For people on Rumble, let me switch back to here. Switch back to YouTube real quick. Make sure I'm on target. Okay. All right, I'm back. All right, guys, so now let's get into it, okay? I hope you guys like that music. Is the music good, guys? All right. All right, cool. So we're just on my website as a placeholder. I'm gonna get into all the details when it comes to this. And for people who are new to the channel, this channel is about trading, investing, money. If you guys want to see how it looks on the YouTube channel versus the Rumble, and for the people watching on Rumble, that's how it looks. All right, but what I want to dive into, guys, is basically currency investing. When it comes to like the yen, the dollar, the won. Basically, since the dollar's up, I think this is a good time to look at other currencies and see how you're basically getting more for your dollar. Okay. So here's the channel. Looks how it looks on YouTube for people watching me on Rumble. All right. And if you guys cannot hear me, let me know. Let me see. Audio is good on there. Give me a second. Let me switch back to Rumble now. It's gonna blink the screen for a bit. Just give it a second. All right, let me get my mouse in a minute. Cool. All right, let's begin. So first off, when it comes to like a lot of international things, first thing we need to do is look at the dollar. So first off, we go to investing.com, and we're going to look at some of the currencies. Look at the dollar and see where its overall direction has been going. So basically, we look at the dollar index right here. And the dollar index, compared to a lot of currencies, has been doing really good. So if you're trying to earn in dollars or you're trying to just see how the dollar's going, it's been predominantly doing good. So other currencies like the yen, the won, even the pound, like you're going to be getting more for your dollar. Let me get rid of this ad. So if you look at the dollar, and then this is the dollar index basically. And you can see we've been on a pretty good monthly bull run for the last few years. We had some big corrections, but overall we're a lot higher. So let's check out some other ones like USD JPY. Actually, we got USD JPY is a good one. So if you're looking at investing in yen, we got the Swiss franc and we got the CAD, and also we got some other good ones. Euro not so much, but let's check the pound and won. That's KR. Basically, it's Korean dollar. Okay, so check that out. And so we can basically flip back and forth. So if you look at the DX, this is the US dollar index. You can see that we've been having pretty good purchasing power versus other currencies. Now we're all going down in aggregate. We basically is all purchasing a lot less. But when we're measuring currency to currency, you can see that the dollar is going to be buying a lot more. Now we're looking at the USD Korean won. So if you're looking at investing in Korea, for example, you can see that if you're starting out with dollars, you're going to be having a lot more purchasing power with it. And once I get the chart up. And once again, we're going to go to the monthly, close out this ad. And if the music's too loud, guys, let me know. Yes, I will be answering questions. You guys got any questions when it comes to trading, forex, economy? I'm going to be covering that in this video, so just let me know. If I go too fast, it's also, again, just let me know. If the music's too loud, let me know, okay? So basically, we got this big move in Korean won. If you look at the monthly, you can see that even if it's 1,000 won for $1, you're about up 30%. And we did have a pretty big pullback, a 3-month down, but overall, it's pushing back up. We might have it hit 1,400 or even above that in the next coming months. So the dollar, if you're measuring it to the Korean won, is doing pretty good. Now we'll check it out for the pound. Okay. And get these ready also. And what you can do with that is you can look at their markets or look at their asset classes and start buying into those. Now, this chart, a little bit different. And now you can see that versus the pound has been doing a lot stronger than the dollar. Actually, let me see. Actually, no, it's reverse that. So the pound dollar, so it's doing much better. So it's kind of inverse. We have to do dollar pound, but they usually refer to it as pound dollar. Let me see if they have it on here on investing.com. Most people don't understand about currency pairs like that. All right, here's a little bit different. So if you look at this chart right here, guys, and I know I'm in the way. Here you go. You guys can see that the pound has been doing really, really good against, really bad against the dollar. The dollar's been doing much, much better. So once again, the dollar's going to get more. It's becoming a stronger currency buying power versus the pound, the Korean won, also the yen. Let's try the CAD next. Swiss franc. Load this up while we're waiting. And the yen right here. And now, if any of you guys do any forex trading or any of that kind of stuff, just let me know in the comments. My whole channel, I do forex trading live. So if you guys want to see that, just do check that out. And I know I'm in the way a little bit, so here, let me scan over a little bit. So here we go. If you're looking at the USD JPY, which is the dollar to yen, you can see since 2012 we've been on a really big bull run. We have a big correction phase right here, but since then we ramped up to almost a height of 150. So basically $1 for every 150 yen, and now we're popping up again. We might stabilize a little bit, but I think we're ultimately going to be going higher. For now, I don't know how long, but I think for the time being, we're going to be going up a lot higher. Here's the dollar to Swiss franc. Here we go. Now the dollar to Swiss franc, you can tell that we have been destabilizing a little, maybe bouncing off the small support, but overall, not that big of a movement like the other currencies. For USD CAD, let's check out the Canadian dollar. Let's go to the monthly. So even on the monthly since 2012, 2021, we've been up a little bit over. I'll say the biggest difference is since 2012. So 2011, 2012. And since we had that double high, we possibly might be going up higher to break this high on the USD CAD. These yearly highs right here. And what does that mean? Like, what do you mean we can buy more? So, I mean, look at like asset classes. Like, if you look at the Canadian stock market or the pound stock market or any of these other markets, you can look at buying them. Give me a second. All right, we got a question from DC. I'm thinking about rolling my 401k into a IRA. Last May, before the market crash, I converted my 401k into bonds. What's a good growth allocation? All right, let's jump right into that. So, I mean, for me, when it comes to like growth allocation, it's going to be a real big thing about how much risk are you going to be appropriating. Like, if you're going to be going to international investments, there is going to be a lot of risk, but a lot of potential gain. And that's specifically what this video is about. This whole live stream is about. So, okay, roll into bonds. No, I'm not a big fan of bonds. My entire channel, I've talked about bonds extensively, and it's just, to me, bonds have not been the place to be. Now, maybe because I'm a lot younger, and the people who got into bonds a whole lot earlier, then yeah, it could have been beneficial. But what the rates at is now, I would say, to me, the best yield is in either in currency exchange, because the dollar is up, and making international investments a lot cheaper. Very, very cheaper. Oh, dude, we're the same age. I'm 34. What month were you born in? I'm December. Here you go. And for the guys on Rumble, you guys can ask a question too. I got both of you guys on live stream right now. So, for example, I'm going to go into your first thing you talked about, the last May before the markets crash. So, if you watched the last Fed talk, and let's go into the Fed right now, okay? We're on Forex Factory. So, Forex Factory basically gives you guys a calendar of events about what's happening. Continue to sign. About what's happening up. And you can see that the Fed, to me, I think they're going to start rescuing the markets. Ugh, really? Continue. Maybe I'm using a lot of the internet. Let's go to here. Investing.com has a good, what's it called? Where's that? I don't really use it on investing.com so much, but we're going to look at the, when's the next time the Fed talks. Crypto.com, currencies, funds, watch list, news. All right, here we go. Financial news, economic calendar. So I think that the Fed is going to start basically reducing their interest rates, because they're not going to be able to afford what the current market is. They can't afford this economy. So with those high interest rates. So what they're going to do is decrease rates and start basically doing the Fed injecting to the markets. And if they're going to start injecting into the markets, I think that we're going to have another rally higher. Now, I don't think it's going to be long term, but I think it's going to be short term in this weird economy that we're in right now. So for me, that's why if you watch my last stock videos or my last couple videos, talk about the markets are going to be going up a little bit higher, maybe doing a double high or breaking that high. And if you're looking at getting into your 401k into bonds, maybe bond rates might be going down because of them, basically injecting a whole lot more currency, a whole lot more inflation, and dropping rates. You might want to look into that, because bonds might not be doing so good. Let's actually bring up. No. Sorry about that, guys. So we got this right here. Let's look at bonds too at the same time after looking at the economic news. Let's look at for this week, because I know this week we got coming up First Friday, and First Friday is gonna be some big stuff coming up. So what day is First Friday? Give me a second. First Friday is March 3rd, and March 3rd. Where's March 3rd at? February 28th, 29th. Give me a second, guys. There's a lot of economic news. So March 3rd, cool. Let's look at for the dollar. Dollar. All right. So here we got FOMC member Bostic Speaks. We got a couple other. We got Bowman Speaks. So if they're going to be talking, we're going to have some big volatility coming up. It's just that I already know the game plan for the Fed is. The Fed, they can't save the markets long term, but they can paper over it as much as they possibly can. And that is inevitable. I mean, that is what you can see also in the what's called the Fed balance sheet. Here, I'll give you guys an example. I haven't showed this in a little bit, but if you go to my website, go to economy, go to, where is it, gold/precious metal, where is that, gold, give me a second, I gotta find it. It should be the Fed versus the gold. Oh, here we go. So basically, it's showing that the Fed is going to be doing a massive amount of printing. I mean, that's the only option that they have. And their balance sheet, since the pandemic, scamdemic happened, we've been having their balance sheet just explode. And you can see financial assets go up with it at the same time. So if you're looking at getting into your IRA and staying in bonds, or you want to get out of bonds, maybe look at the direction what the Fed's going to go. And that's how I typically trade. If the Fed's going to start pumping the markets, then guess what? I'm going to be getting back in the stocks and seeing how I can manipulate or get into what they're doing. Stop seeing these ads. God, I hate all these ads. Such an annoying thing on these ads. But besides that, one of my other videos you guys watch, I talk about precious metals in literally every economic video. If the Fed is going to be pumping the markets and interest rates are going to be going back down, markets are going back up, either hitting their all-time highs again, or doing a double top and crashing back down. Let's actually bring up the Dow real quick. Let's bring up the Dow real quick while I'm talking. So if they're going to do that long term, if you're building up like your retirement plan, maybe short term, looking at what they're doing and manipulating, building up what they're doing. Because to me, if they're going to be pumping the markets again, it typically is typically in trading we call the trend is your friend. So if the trend that the Fed is going to be pumping it, why not get on that trend too? So let's look at the monthly, and this is for the USDX, or basically the Dow, and to get the Dow is a really good indication of the top 30 U.S. companies. Here we go. And if you guys can't see it, I'm gonna drag it over to the right. Okay, give me a second. All right, let's do line chart right here. All right, cool. So if you guys see this chart, we topped out on the Dow about 36,000, almost 37,000, and right now we're doing this big push up. You guys see this candle right here? Massive, massive, big push. And can the Fed continue this to go higher? Yeah, they can. They can just inject cash directly into these markets, right from their trading desk. So if I know they're going to start doing that, because their balance sheet can't handle this. So they're going to start, their balance sheet is going to go up, check. The markets are possibly going to go up higher, or basically do a double top or break it. And if they're going to do that, I'm going to ride that trend as much as I possibly can. Now, is there going to be volatility? I think there's going to be a massive volatility, like something like this. Like, in a matter of 3 months, we went from 28,650 to a bottom, what's that low of the candle? A low of 18, and then way back, push back up. Will we have something like that again? It's possible. We might push down hard, and then the Fed injects more currency into the markets, and then we do either a double top or possible high. But I think that's what the overall direction is going to be. So my game plan is to trade the markets, the stocks higher, and it's going to be on a leverage and also on a cash basis. And my secondary plan, since I know the Fed's going to be doing that, is because they really don't have any other strategy, is either print or lie, or I'm sorry, print and lie, because that's all the Fed does. So for me, I'm going to be also buying precious metals on a weekly basis. And I talked about that in multiple videos. I think precious metals are going to catch up tremendously. And when the markets do ultimately crash, either in a deflationary, hyperflationary way, or there's multiple ways it can crash, but ultimately I think the markets are going to purchase less, and precious metals are going to purchase more. And if that and when that happens, it's going to be a big wealth transfer from people who are on basically digital markets and fake stocks, basically pumped up stocks, real estate, to precious metals and energy. And if I was going to look at building an IRA or long-term investment, that's where I'll be focused: precious metals and energy. Because despite what they do, energy is going to keep going up. This is where our current government's in. They're in the government of clean energy, but all they're doing is making energy more expensive. And actually, let's go into that a little bit more. Let's go to crude oil, okay? And if you have any questions, once again, guys, on Rumble, just let me know. And for people on YouTube, let me know. I have no problem answering questions. I find it's a lot of fun. And I'll be doing this live stream every single day. Every Monday through Friday. And I'll be posting 2 videos. So either it'd be basically 3 to 4 videos a day. So giving you guys the best content out there. And for the people watching me who program and trading, if you watch my trading robots, I live stream them every market open, New York Open. So New York Open, you'll see my live trading robot and me trading the robot without me physically trading it. And that's how I do most of my trades. But let's get into oil. A good thing about oil, if you're buying it in dollars, it's going to be a whole lot cheaper. That's the hints of this video. Currency investing. Let me go into this right here. Give me 1 second, guys. I got a lot of videos. I got a lot of live streaming right now, so the internet's kind of slow on my part. So forgive me on that. And we can see, guys, if you're looking at crude oil, you see that big manipulation down here, that negative zone. We can see oil hitting back up higher. And if oil does head back higher, the economy is going to be a whole lot tougher. But it's going to be tougher more on the international side than it is in America. Because in America, everything's priced in, oil is priced in dollars, and people are buying things in dollars. So there's going to be a chase and a demand for dollars. And that's going to be a possible, if you guys look at this chart, the US dollar index. I might do more to the dollar index by pushing it up even more so. And making these other currencies like, let's go to the Korean won or Canadian dollar, or let's see, not this one so much, or the yen. You guys can buy more. So if you guys are looking at international brokers, I have one. I think it's in the description, but it's basically a Boom Money. And if you guys do get with them, you guys can buy stocks in international currencies. Basically, you can buy more. So you want to buy like energy companies or stocks in other countries, you're getting more for your money. Okay. And that's a potential strategy people can use for retirement. So you're buying an asset class that's even cheaper. So if you're going to be holding it for their next boom market for a 10-20 year phase, you can get in at the bottom and then sell at the top or near the top, and then exit that position and put it into another underclass or undervalued asset. And that's all you're doing, going from undervalued, overvalued, undervalued, overvalued. And that's why I like about currency trading, and that's why I want to talk about this in this video. So for this live stream, it's just because of that point. And if you guys want to, I'll show you a good example. If we start looking at gold prices, let's bring up gold prices measured in yen. Okay. So first off, let's look at XAG. So XAG. Oh, sorry, that's silver. XAU. So if we look at gold prices measured in dollars, okay? So we look at spot. We can see that we're almost kind of like bouncing off this double top, maybe possibly making a triple top on gold, right? Currently at 1 ounce of gold, like one coin, is trading at basically spot price $1,808. But if you look at the international way, XAU, say JPY, okay? and that's gold spot to Japanese yen. Look at the chart. We went past that high, and now we're making almost all-time record highs. So that's why it's very important to see where the undervaluedness is at internationally, especially if you're in America. If you're in America and you're earning dollars, it's going to be real cheap getting assets overseas. Much, much cheaper. Not all countries, but just look at the purchasing power. And purchasing power, basically, you guys can look at what their market is. But let's look at that right now. Economy, indices. Let's see. Let's look at some. Actually, let's look at some stocks on here, okay? To give you guys an example, okay? So we'll look at Stock Screener. Let's look at, since the dollar is high and the yen is a good example, let's look at Japan, okay? Now, doing this is a little bit more advanced, but I'd tell you, like, if you're going to get into the investing, you know, might as well get into international investing, especially if you're in a strong dollar. All right, let's look at, so we're going to have Japan, check, all equities. Let's get dividend yield. And let's look at some companies that have some good dividends. Because it'd be interesting if you're earning dividends in yen, cheaper stock, last volume. Let's just do last. We don't need market cap so much change. All right, let's do high to low. Now, I don't know about all these companies. I'm just showing you guys an example of what to look at. So all I did was go to investing.com, go to stocks, click in Japan, and I know, because remember, Japan, the dollar to Japanese yen is, the dollar is way stronger, right? Let's look at this right here. If we look at some of these stocks, this is trading in yen, right? Symbol, oh, forgot the last. So this is, let's find a big company. Actually, let's bring up market cap. Let's do by market cap. 5 billion, those are millions. All right, so we got Toyota. All right, Toyota Motors, symbol 7203. Current dividend 2.83. Now remember, your dividend is going to be paying in yen, not in dollars. Okay? And this is why it's interesting to build up a portfolio of different currency income. So if one day the dollar does reverse and goes down, your stocks that you own in yen can be purchasing higher. So that cash flow you're earning is going to be earning even better. Okay? Give me a second right here. Check the chart out. Now, when you make this portfolio, basically, it may be a little bit, you're adding a lot more complexity to it, but to me, it just makes it a lot more fun. More complex when it comes to markets, makes it a lot more things to research. So, even with Toyota Motors basically going up and maybe possibly making a correction phase, but even if this is going down and you're earning, you're still buying it on a very discounted price because your purchasing power, so 1855, if we do like some math, right? Where is it at? So 136 to $1. Okay, let's go back to Toyota. 1855 divided by 136. So one share of Toyota measured in yen is going to run you about $13.64. You're going to be having dividends in yen, not in dollars. So now when you look at your different, oh my God, your portfolio, you're going to have some assets in yen earning in yen. Okay. But DC, you have any other questions? Or am I going too fast? Just let me know quick. And before I get off topic, I'm going to share this to my group real quick. Give me 1 minute, guys. All right, give me 1 minute. And stream has disconnected, attempting to reconnect. All right. Give me a second. Okay. And if you have not joined my Telegram group, please do, guys. It's in the description below, and that's the best way to contact me if you want to ask me questions or see any of the trading services. Okay. Share to Telegram. Give me a second. Here you go. I'll post the Telegram link right now in the group, okay? In the chat. So you guys want to join, please do. I answer Telegram relatively fast. Hit copy. Give me 1 second, guys. I'm on 2 different platforms at the same time. Oh, loud ad, my bad. Sorry about that, guys. Alright, there you go. That's the link for the Telegram group. If you guys want to join, please do. Alright, now, I just talked about, looking at this stock, Toyota, getting income in yen. You can do the same concept for won. You can do the same concept for other countries. Now, let's switch it up a little bit. Let's go to Korea, okay? South Korea. So if you were looking at investing in Korea, doing the exact same thing I just talked about, all right, we can look at Samsung, right, for real quick, right? Samsung's last is, actually, what is a Korean won, real quick? So basically, it's 1319. 1319. So you're looking at getting to Samsung right here. Samsung company, 61300 divided by 1319. $46 per share. They have a dividend of 2.36. So if you're looking at investing in Korea, you can be earning 2.36% each year in won. So if the dollar does crash one day, and remember, it can't always be up. One day the dollar is going to change. And it'd be nice to have international investment money coming in. So when the dollar does crash, your Korean won portfolio starts going up at the same time. And these are just some companies. I don't know if they pay, like, they may say they pay 16%, 12%. You might have to look into it. This might be annual, might be quarterly, might be monthly. And that's just the dividend yield divided by 4, 1, or 12 months, depending. But this is something just, some food for thought. I would say take advantage of the strong dollar as fast as you can. And let's look at, actually, we looked at some gold measured in yen. Let's look at, give me a second. Let's look at gold but in Korean won. KRW. They don't got that. So let's look at what other pairs they got available. Oh wow, we got Hong Kong dollar, we got Canadian dollar, we got Australian dollar, we got Chinese won, Japanese yen. Oh, so there's a lot of things you guys can look at. I just use gold as just one metric, okay? Because I think gold is very good when it comes to inflation. So Hong Kong dollar's doing pretty good, very near the same. And since we have a very interesting Fed and interesting government, and all they know how to do is spin, owning energy and getting into energy and also owning precious metals is a very good play on their stupidity. Let's look at Canadian dollar. Canadian dollar, like, look at that. Back in 2007, 712 Canadian dollars. And today, you're talking about an insane growth. And is the Canadian government doing the same thing many other governments are doing? Probably spending and spending and spending. Possibly. Let's look at let's look at the debt clock countries. Now, I talked about this in my last live stream, but since I am getting into currency pairs, let's get into this right here. So look at the debt clock right here. Actually, what time is it right here? Okay, look at the debt clock right here. So remember, we live in a debt-based economy. Most countries just live in debt. So they're just expanding their currency supply, just expanding. And if we know this, we know how these governments operate in debt. Owning something that's real, like gold, and this is why countries don't like gold, because it requires them to be honest most countries are dishonest, and they just print, causing their purchasing power of their country less and less. But it doesn't affect politicians because they earn a relatively high income, and like in the United States, they can do insider trading legally and basically outperform inflation, while the majority of Americans cannot. And you can see that it is ticking away. So if I know this, and you should know this, I think most Americans and people around the world know that this perpetual debt, owning real assets, energy, and precious metals, is a good balance to their stupidity. Okay? How long has this live stream has disconnected? Give me a second, guys. Oh, okay, it's up. It's running. All right, if you guys got any questions, let me know. I don't mind going into any other details. I did cover some of the my basis for this video: international investing, looking at stocks, precious metals, and basically working what you have when it comes to the dollar. The dollar's strong, so use that strength to buy cheaper assets. Let's look at the dollar a little bit more. So this is actually the U.S. debt clock, and I talked about this in my last live stream, and you can see it is ticking away. Insane amount. Oh my God, debt per citizen, debt per taxpayer, $246,000. Like, so every 5 seconds, it's about 6 seconds, the United States national debt racks up another 100,000. But our total debt, including unfunded liabilities. Oh, give me a second. Where's the total debt with unfunded liabilities? Oh, here it is. U.S. total debt, $94 trillion. Craziness, guys. I think the only thing that's going to be one of the best performing assets is going to be precious metals. And let's look at a chart of precious metals real quick. If you want me to cover something, guys, on this topic, let me know. Let's look at gold prices. All right, let's take inflation adjusted out. Now, I'm on macrotrends.net, one of my favorite websites to look at things for like precious metals. And you can see, as they print and the Fed's basic budget has been going to infinity, gold has steadily increased over time, and we might just explode even higher. Now, there's some economists that talk about precious metals like gold hitting 10K, or some even say even higher. But we just know that the other side, the Fed balance sheet, is going to keep on expanding even more. And the dollar purchasing power is going to be even less, and it's going to be even tougher on Americans. So just get prepared. Understand that I'm trying to stay away from the politics so much, but it's pretty much woven into this conversation about international investments and why Americans are looking to go overseas. What else? 31. Yeah, that's pretty cool. But thanks, DC. Please join my Telegram. You can hit me up if you have any questions about your 401k. We can talk about it more. I can't tell you what to do, but I think some general information that will definitely help you out, since especially we're in the same age category. We're the same age. Let me see. And for the guys on Rumble, if any questions, guys, let me know. Basically, it's not much else to go into for this live stream. I covered everything I need to go into. Oh, actually, let me go one thing before I pull the plug. There is one question: which one should you do more, gold or silver? We're gonna look at this chart called the gold to silver ratio chart. Okay, I like looking at this chart because it shows which one is more undervalued. Now, I think precious metals are way undervalued when it comes to the stock market, real estate, bonds, all those other, even crypto. I think all those other asset classes are very high, some proportionally high, like some of them are 10 out of 10 high. Cryptocurrency can be like 6 out of 10 high. But I think when it comes to silver, I think silver is like a 0 out of 10 or even a 1 out of 10. That cheap. And gold's like a 3 or a 4. Still cheap, but not as much. But when it comes to this chart right here, guys, let's take a log scale. So this shows how many ounces of gold it takes. I'm sorry, how many ounces of silver it takes to get 1 ounce of gold. Let's look at the last 10 years, and you can see that it takes 81 ounces of silver to, 87 ounces of silver to get 1 ounce of gold. Now the traditional standard has been about, 8 to 12, 8 to 15. Right now we're at 87. So when silver goes up and gold goes up, I think silver is going to be in more extreme up. So when it comes to this currency investing, when it comes to this debt bubble, I think the greatest gain will be in silver. But I think having both will be the best. Oh, what's up, THB? Me and him will be live streaming on Wednesday. Check out his channel. His channel is really, really good. If you want to learn about more options, other ways of looking at finance, check out his channel. Me and him, we paired up, and since we met, we've been doing really good. It's been a really great bond, especially for YouTubers. So check out his channel. Hey, drop your link into your into the channel, okay? Into the live stream box, okay? Our next thing I gotta show you guys, since I just talked about cheaper assets, let's look at which asset is cheaper when it comes to the markets. Because I know I say these things. Let's actually look at it, okay? Let's look at some evidence. We're gonna look at the gold price versus the stock market, okay? And once again, Macro Trends, one of my favorite websites to look at charts and data. So if we look at the overall stock market, you can see that the stock market has been, this is basically like an average. It's up over 61,000% versus gold. Which one do you think is more undervalued? Gold or the stock market? To me, it's definitely the stock market. I'm sorry, undervalued is going to be gold. Let's look at some other things. Let's look at gold to oil prices, gold to dollar correlation. That's a good chart. Dow to, oh, here it is. Dow to, this is the Dow to gold ratio. So when you start measuring things with things, you can compare which one's cheaper, okay? All right, let's go into this. We'll take off log scale a little bit. So we can tell if we had another chart and look at the Dow. Actually, I already have it up. Give me a second. It's somewhere around here. That's the dollar, crude oil, Toyota. Where's it at? All right, here we got the Dow right here. Let's look at the monthly, okay? Woo! Talk about the Fed intervention into this chart. So if we look at the the US 30 or the Dow, first forex traders US 30, right? And we compare it to, bring this over to the Dow over here. Gold silver ratio, the Dow. Yeah, here we go. So if we start comparing to stuff like this, you can tell that it takes basically 20 ounces of gold to get 1 share of the Dow. Now, what it's saying is that the purchasing power of stocks currently measured against the purchasing power of 1 ounce of one spot gold is about 20 ounces. And this can be overvalued and undervalued. And right now we're about in the middle. So to me, if this keeps on trending, it's going to show that the stock market is going to be way too overvalued and pushing gold to undervalued, causing that if you buy cheap and when they do crash, stock market goes down, precious metals go up, and now you have a very, very big winning trade. And you also combine that with currency pairs. Your currency, the dollar being strong, gold being strong. If you bought cheaper stocks, international stocks, when that happens, it can be even cheaper to get into, or that reverse for our stock market and their stock market, causing you a big wealth effect. And that's what I like to talk about, is wealth transfer. It takes 30, 40 years, but once it does happen, you only need once. All right. I've gone into a lot of detail. I mean, give me a second, guys. I'm looking at the chat on Rumble and the chat on YouTube at the same time. Give me a second and hit it on my laptop. Give me a second. But once again, any questions, comments, guys? I'm at the end of this live stream. Thank you guys for making to the chat. Thank you, DC, for that super chat. Hit me up on Telegram. We can talk about it, or hit me up on my website. Send me an email, and we can talk more about your 401k or just some general plans about it. But thank you guys. I will see you guys on the next live stream tomorrow, and I'll be posting 2 videos today. Before I go, where are 2 videos? Oh, Dividend Snowball and my daily crypto news event. Okay, so I'll be posting those 2 in a little bit. So check those 2 out. Please, guys, like the video, subscribe to the channel, donate. If you guys, I am looking at making and programming my own cryptocurrency, but I'll be talking about that a little bit later. So for those who program, know that I programmed for many years now, and I love programming my own trades. But I'm gonna get to another video, guys. See you guys later. Thank you guys for making it to the end. Deuces. In live stream on Rumble. Give me a second, guys. In live stream. All right, bye, Rumble. Alright, and YouTube, where's YouTube at? Give me a second, guys. Got like 5 screens, so I'm everywhere right now. Alright, see ya.